Hello, I'm Martin Smith and this is your week in review for MaxiForex. Let's begin today with the week's risers and fallers. After 2 weeks of gains, the euro-dollar was seen under pressure. The pair fell 0.04% last week and was last traded at 136.08. The British pound also closed on a negative note last week against the greenback, making a fall of 0.89% to close at 158.59. This was the third consecutive week of poor performance for the US dollar against the Japanese yen. It ended with a drop of 0.55% and the pair was last seen trading at 82.11. The CAD had a decent week against the greenback. The pair rose 0.58% and was last traded at 100.93. The Australian dollar also had a mixed week against the US dollar. The Aussie ended up gaining 0.31% to close at 0.9974. Gold had a poor showing last week, as it has the past 4 weeks, ending up losing 0.52% to close at $1,335 an ounce. March crude contracts fluctuated this week and crude oil was last traded at $89.55 per barrel. Oil fell to $85.10 at one point to peak at $85.68 per barrel. In news this week, Egyptian police had to fire tear gas when thousands of demonstrators charged through the center of Cairo. Trucks carrying riot police were pelted with rocks. In the ensuing chaos, authorities also restricted internet and mobile phone access and detained the senior leaders of the main opposition groups. Currency strategist Brian Kim said that this unrest in Egypt is triggering a broader pullback, as there are a lot of headlines in the region and the euro Swiss and the euro dollar were getting hit harder last week. This also had a major impact on stock markets, with the Egyptian pound, the EGP, dropping to a 6-year low. Egypt's banks will be closed today after the deputy central bank governor expressed his fear that this could spook investors looking to trade after unprecedented countrywide protests. Moving now into Asia. In Japan, the governor of the Bank of Japan expressed his view on the economy last week and expects that the economy will soon recover from its slump as the deflationary pressures are easing up due to overseas demand, bolstering the nation's economy. An economist at Daiwa Asset Management Company in Tokyo said that the economy is pretty much past its temporary slump, but there's still a risk that bond yields could rise over concerns about Japan's fiscal position. This would especially be the case if Prime Minister Naoto Kan has any trouble passing the budget. Standard & Poor's have lowered Japan's rating to AA-, the fourth highest level, confirming constant deflation and the government's lack of a reasonable strategy to address the nation's debt burden. The unemployment rate unexpectedly fell up to 4.9% from 5.1%, the first decrease since September. The Bank of Japan's policy board has forecasted that consumer prices will hike 0.3% for the year beginning in April. This is higher than its October prediction of 0.1%. For the year ending March 31st, prices will probably decline 0.3%, lower than its previous forecast of a 0.4% drop. On the other side of the Pacific, the US economy accelerated in the fourth quarter of 2010 when consumer spending climbed to its highest level in the past 4 years. Commerce Department figures show that the gross domestic product of the US grew at 3.2% annual rate. Excluding stockpiles, the economy rose at a 7.1% pace, the most since 1984. Guy Labas, chief fixed income strategist at Janney Montgomery Scott LLC in Philadelphia, who has accurately forecasted the rate of the growth, believes that it was consumers who were driving force behind the economy's strong showing in the fourth quarter. The dollar has been boosted by expectations that the recovery will be seen this year, thus boosting sales for companies including General Electric Company and Apple Inc. Well, that's all for this week. Thank you for joining us and be sure to visit us at MaxiForex.ru.